My name is Anka Metcalf, and welcome. Today is so welcome everybody. Welcome to the Trade Out Loud Futures Trading Room. My name is Anka Metcalf. Today is Wednesday, or should I say Wednesday? It is March 18th, 2026. It is 9:20 a.m. Eastern. So we're roughly 10 minutes into the New York trading session open, and we're ready to go. Don't forget, today we have the FOMC meeting that is coming up at 2 p.m. We have the federal fund rate. We have the FOMC economic projections, the FOMC statement, and of course, the presser, which comes at 2:30. So the market is reacting to the core PPI numbers that were released earlier this morning at 8:30. And you could see that from 8:30, the market has started to come in a little bit. So we have NASDAQ, which is down about 100 points, 0.4%. We have the mini S&P, which is down about 10 points, 0.4%. And we have the Dow, which is down about 259 points, 0.55%. So we're seeing like pretty much they're moving in sync, they're synchronized, they're not accelerating or decelerating. But we do have the small caps. We do have Russell, which is 22% down and closing in on 1%. So far, 0.9%. We're seeing again a reaction in gold, and we talked about a potential reaction in gold as we're heading into the FOMC. Voila, this is it. And we're seeing Bitcoin here that had a really beautiful rally in yesterday's trading and started to move higher. We actually had a high of the high of 76,200 yesterday, and right now we're rotating back down. We took the doji low. We're still into minor support, and we're still above the 10 exponential moving average, which puts us again into a position of hold right here. All right, so let's get into the market analysis and see what we have going on. And for this, I would like to share a different screen. So just give me 1 second. All right. And here we go. I think it's easier if we look at this screen right here because you understand a little bit more about the macro structure of it. Okay. So we're going to start with the mini S&P here. Okay. And as you can see, obviously, we have a powerful trend to the upside, but we have been trading in this range for a really long time. So basically, since October 30th, we have been trading into this range, and we're still holding into this phenomenal long range. So we did have one tap off of the 200 SMA. We had the second tap off of the 200 SMA, but yet the price action is still getting rejected from the 10 exponential moving average. We are still into a very strong structure. So this is basically, we are in the third cycle of the market, which is, again, very similar to the first. It's either we're going to break out and continue the acceleration higher, continue the greed phase, continue the accumulation phase, or we start the distribution phase, which is going to be below the base. But again, we need to have plenty of confirmation before we actually dive into the short side. And again, don't forget today's FOMC, so adjust your size. It depends on each person's risk tolerance, on how you handle size, or if you trade at all into this day. Don't forget that this whole entire week is under the umbrella of the quadruple witch option expiration, and the price is going to be haywire. So there are going to be a lot of surprises. You're going to get big up move, big down move, and a whole lot of sideways, and not in that particular order. The price action is not true to technicals. It's going to get really wild. And for today, what we will be looking for to see if we hold inside yesterday's parameters, yesterday's high and yesterday's low. And if we do, and if we hold even above the 10 exponential moving average as we're moving into FOMC, and after FOMC, we're going to have, to see what kind of decision they take, whether they're going to be lowering the rates or it's going to be like the no event unchanged rates, which I expect it to be. All right, so as we're moving forward, let's tackle the Dow. So some critical levels that we have right here is basically the support that was set. We have this double bottom confirmation, yet still the big issue is the 10 exponential moving average, which has been rejecting price every single time it tapped into it. So the line in the sand is going to be if the price is going to trade above yesterday's highs, and implicit, we need to see a close above the 10 exponential moving average in order to gain some traction to the upside, because if we're not, we're going to remain into the same old structure. And again, we are not going to expect any kind of follow through, volatility moves, and so on and so forth. So trading is going to be a little bit difficult, whether you're swing trading or whether you're day trading. And I agree, there are some stocks that are really moving that I pointed out yesterday in the trading room. All right, so the Dow critical level is 46,323. If we get it above yesterday's highs, which would be the 47,500 level, we would be moderately bullish as we're going into the next resistance area, which would be 48,000 and around the 4820. So we're taking baby steps because we're analyzing every single day at a time. So again, the implied move would be around 48,000, and this is what we should be expecting. All right, and then we're gonna move to NASDAQ range bound. Again, the massive range bound action, again, very similar to the structure into the mini S&P. We're having the rising 10 exponential moving average, 200 simple moving average, I'm sorry, that is also lined up with support, with multiple support zones, because we have been trading into the same support zone since October 9th. So once again, the line in the sand is going to be whether or not we are going to trade and sustain the prior day's high, and then try to inch higher, and try to close as higher as we can, so we could get a little bit more traction and we could snap up and rotate from this bottom up, because we have basically a salad of candlesticks right here. So we need to literally see the price above 25,300 to get some traction. And I have to say that I have been looking at this prior high, and something tells me that if we manage to close above one day, whether it's going to be today or whether it's going to be sometime this week or next week, but if the price action is going to trade at one point in time above this 50 simple moving average and above this prior high, which is into the 25,500, we will gain a lot of traction that may push the price back to the upside. However, if today's price action is going to be bearish and we are going to get a revisit to the 200 SMA or even below that, so another test into the support zone. Remember, the more we get tested into a support zone or a resistance area, it means that the price action is not likely to hold as much. So then we could see a shift in price. So if we start trading below this level of support right here, we could start accelerating lower. But by accelerating, testing lower levels, because the market has been very resilient since October, November, December, January, February, and this is March, middle of March. So it's still holding on very, very well. All right, let's take a look at small caps here. And we have a triple bottom formation that was developed, actually really nice triple bottom formation since December 2025. So just so we understand the structure, we had a snap up, we had a base holding into the minor support, really great, fantastic level. And then we had a revisit to the downside. And okay. So we have the same 200 simple moving average based on which the price action snapped. And we still have the same problem with the declining 10 exponential moving average, which is rejecting price every single time. And I think one of the reasons why this is happening is because first, the low volume that we're having in the market. Number two, the hesitancy of bigger investors bringing money into the market, whether it's in the stock market, because even the stock market is relatively lower in volume than what we had and we have been used to before. So bottom line is that we need to see if the structure is going to hold. The big line in the sand is going to be, yes, the support level that has been developed over here into the 2462. However, this second layer of support into the 200 SMA is going to be of critical importance as well. We are not going to discuss oil, and we're not, I mean, I can bring it up and we can actually, just tap on it a little bit. Oil has been extremely resilient, and the prices remain above the 10 exponential moving average and trending. But we have had a base for the last 4 to 5 days. So the price action has been ranging from $91 to about $103. Again, if we snap above the 103 level, we could potentially start continuing and accelerating higher. And again, keep in mind, this is geopolitical. This is going to be a geopolitical move. So it's not necessarily 100% technical. It's the fear and greed that is taking over. And that's what it is over here. And then if we look at gold, you can see that, after this really ascending chop that we had, the price action is pulling back. We've talked about this for weeks, that gold is not ready for a real good caliber type of trade, and it's not seen as the safe haven right now. So we're going to have a little bit of patience and wait until things settle down. And what I'm going to do right now is we're going to go back to our day trading structures to take a little look at them before we wrap up the pre-market game plan. And we're going to go, right here. Okay, here we go. All right, so as you could see from the structure here, this is the intraday, and this is where we're going to be focusing on. We're going to look for relative strength and relative weakness. So we've noticed a little bit of relative weakness in Russell, but it's back to 0.5% right now. Okay, so we're not going to be day trading Bitcoin or oil or gold today, but our focus is going to be the major indices. So what we're seeing right now is a lot of digestion, right? So the overnight traders took the price down, right? The reaction, but this is the reaction that we need to literally watch, because this is the New York trading session, right? So let's see how the New York trading session handles this. If we're going to get a bigger type of bounce and a shallow pullback, we are going to be probably hitting higher into the FOMC. If we are going to get a very shallow bounce, and I'm looking at symmetry throughout, so far the price action tapped into the 21 SMA in NASDAQ, tapped into the 21 SMA in the S&P, tapped into the 21 SMA in the Dow, and also in Russell. So we have complete symmetry here. So the clue is going to be based on this 5-minute candle structure, because it's very close to the low of the Dow, to the low of the S&P. So we have basically two elements that we're going to look at. We have, number one, the close of the 5-minute candle to see where the low is and the high, and also the prior structure support. Because if we hold these levels right here, we may have a short squeeze. However, if the price action is going to get rejected from these levels, we are going to see a reversal. Okay, so this is it for the pre-market game plan. Let's We have roughly about 1 minute, a minute and a half left until the close of these candles. And we are ready to go into our decision. All right. The ranges are not that bad. Yep, the ranges are okay-ish. 134 in YM so far on the 5-minute candle, 12 in S&P. Wow, this is really good. And we have 57 in NASDAQ. All right, let's start actively watching for a trade.